Welcome back, everyone. Doug Burson here, CPA, and today I want to talk about the advanced child tax credit. I've gotten a lot of questions on this, and I figured the easiest way to deal with this is just to go ahead and take some time, talk to you about what it is, about what I think maybe you should do, and then at the end of the video, I'm going to walk you through step by step how to opt out if you choose that's the best scenario for you. So with that, let's go ahead and get started. So what is it? Well, the child tax credit has been a part of the code since 1997. The Congress enacted it to try to help working families offset the cost of raising children. Now, we all know a lot has changed since 1997, including, let's be honest, how expensive kids are today. My goodness, between baseball and everything else, you know what I'm talking about if you have kids, they cost a lot of money. So whether you agree or not with the new rules under the American Rescue Plan Act, you need to be aware of what they are. So that's what we're going to do. So first of all, one of the things that has changed is the age limit. If you remember the child tax credit, 16 was the last year, and with 17, it got phased out. And you're always like, Doug, why is that? And my answer is always because Congress says so. I don't know. But that was the answer. But now they've changed it to 17. So the child tax credit is all the way up through 17. They've increased the amount, and we're going to talk about that here in a little bit. They've increased the amount. How much? Well, children under the age of 6 will now receive a child tax credit of $3,600. And if you remember, the child tax credit last year was $2,000. So that's a substantial increase. And on top of that, not only have they increased it to $3,600, but most of you are aware of this, for children that are 6 and under 6, children under the age of 6 will now get a upfront check to the parent of $300 per month for the rest of the year, starting with July. What about the others? Well, the children that are age 6 to 17, those kids are now going to receive a credit of $3,000. Remember, it was $2,000, so that's a $1,000 bump. And what they're going to do is they're going to give you half of that up front, just like they did the other one, at $250 a month starting in July. So now what does this really mean? Well, there's something you need to think about. If they're giving you the child tax credit up front, what does that mean? Well, that means when we go to file the tax return next year, you're not going to have as much child tax credit as you have in the past. But it may not be as bad as you think, because when you look at it, if you have a child that is under 6, you're going to get $1,800 that's still going to be left when we file the tax return. So it's only going to be $200 less. So whatever you had last year, you're going to have to subtract $200 off if everything else stayed the same. But what if you had a kid between 6 and 17? Well, if you remember last year for them, it was $2,000. This year it's only going to be $1,500 if you didn't opt out. So that means if you've got 3 kids in that age bracket, you could end up $1,500 short on your tax return, or $500 per kid. So that can be a big deal, and that's why I really want you to be aware of this. My big fear is that you're going to get this money, and then next year when we file the tax return, we're going to end up short. So I really want us to think about that. And there's a couple other snafus in here that we're going to get to a little bit later. So as I've already said, these payments will start in July, and they're probably going to start July 15th is my understanding. If you want to opt out and you haven't already done so, it's too late to opt out for July. You're just going to have to accept that you're going to get that payment. But you still have time to opt out for the rest of them if you think that's the best move. And at the last part of this video, I'm going to take you to the IRS website and walk you through step by step how to do that so we can make that as easy on you as possible. Now on top of that, they've also increased the tax credit phase out amounts. So what do I mean by that? Well, what I mean is that if you make over $75,000 as a single person, you're not going to qualify for the extra amount. You're just going to get the $2,000. You're not going to get $3,600 or $3,000 based on the age of your kid. You're just going to get $2,000 per kid. If you're head of household, that number is $112,500, and if you're married filing joint, it's $150,000. So what that means is if you make more than those thresholds, this additional child tax credit that everybody else is getting, you won't get, you'll just get the $2,000. And that brings up something. Let's say last year you made a married couple, you made 140,000. But this year, through bonuses or whatever, you've gotten big raises, you're going to make above 150,000. The IRS doesn't know that. All they know is that last year you made 140, so they're going to give you the advanced child tax credit thinking you qualify for the full amount. And then when we file the tax return next year, you're going to owe it back potentially. I mean, you're definitely going to owe it back. Well, it depends on if you have a refund or not, but it's going to impact your tax return because you won't have qualified for the 3,000 or the 3,600. You now only qualify for 2,000, and you're going to have to make that right on the tax return. And it's not like some other things they've done in the past. It says if it's in your favor, that's wonderful. They've said you've got to pay this back. So if you expect your income to increase above the thresholds, then I would definitely recommend that you go ahead and opt out. But what about beyond that? Well, the child tax credit's still there up to the normal thresholds. And what those are is if you are single and you make less than 200,000, you'll qualify for the 2K. If you make more than 400,000 married, less than 400,000 married, you too will qualify. But once you go above 200 single or 400 married, you're no longer going to qualify for the child. That's not quite true. There's a phase out, and that phase out as it drops, I believe it's $50 for every $1,000 you go above the threshold. And so once that happens, your child tax credit is going to go down, and eventually it will phase out completely. Another thing, though, that I really want to caution you guys on is don't get attached to this monthly income stream. For now, this thing is set to expire at the end of this year, and in January, you're not going to get another payment. It's over. Now, I know there's talk on the Hill that they want to extend it. So far, they haven't, and I think there's a lot of opposition to it, so I don't know which way it's going to go. But I don't want you to get used to this money and start spending it thinking that it's going to always be there, and then in January, your budget gets busted because you banked on something that just isn't going to keep going. So please keep that in mind with this. Use it wisely or opt out, but don't make a dumb decision. That's all I want to say on that. So what do I recommend? Well, I think I kind of played my hand a little bit there. I recommend that if you don't need it, just opt out. Or if you expect your income to be higher, like we talked about, you probably want to be opt out. Another thing that we got to be very careful with is children in divorce situations where you claim them one year and the ex-spouse claims them the other year. Well, the IRS is going to assume that if you claim this year or in 2020, then 2021 you get to claim again. They're going to send it to you. And when we file the tax return, you're going to owe it back. So if you're in that situation, you definitely want to get in there and opt out. If you're on the other side and you could use the extra income stream and you're not worried about it, you could go ahead and opt in so that you do go ahead and get it in advance. And in your case, that may be a wise decision. Everybody's got to judge that for themselves. Another reason that I would expect that you should probably opt out is if you owed last year, right? This is free money. It can offset your taxes. Think of it as free estimated tax payments that you didn't do. If you owed last year and you haven't made any changes, maybe you should opt out, and that'll help you start getting ahead. And then next year you'll be in a position where maybe we can start doing tax estimates instead of always chasing the prior year. And I think this could be a real advantage for some of you who are in that boat to start getting on the right side of the ball. So take this opportunity and let's do just that. If you choose to get it and you don't need it, pay off some credit cards or do something smart with it. You don't need a 70-inch TV. Come on, let's be honest. I do, but you don't. Okay, so if you're still watching this video, you've probably decided that maybe he's right. Maybe I should opt out. And hopefully that's a lot of you, because I don't want to see you guys owing on your tax return next year. But I know some of you it's going to make sense. So, I'm not against you. Just do what's smart. With that said, how do we opt out? Well, you're going to go to irs.gov. So we'll just start at the beginning. Let me take you there. irs.gov. And right down here, you'll see child tax credit. Just go ahead and click on that. And from there, we can manage payments. And it's also important right here in the middle of the screen, you'll see this section right here. I didn't mention it before, but if you are in a situation where you don't have to file a tax return, you may still qualify for the child tax credit just because maybe your income was low last year, so you didn't have enough to file. That doesn't mean you don't qualify for this advance. So if that's you, you can go ahead and enter your information there and go ahead and get in line and receive it if that affects you. Otherwise, you're probably going to have to file a tax return next year. So this would probably be the best way for some of you in that boat. But here we are. If we're going to manage payments, we're just going to click this and manage payments. Now at this point, it's going to prompt you to create an ID. And so that's what we're going to do. We're going to create an ID. Some of you may already have an account, and if you do, you don't have to do this. But I would expect that most of you do not yet have one. So we will go ahead and set one up now. You'll want to put in your email, create a password, and then create the ID. So we'll go ahead and do that here. Obviously, we're going to continue, and you will get a 6-digit code. So I'm going to go check that, and I will be right back. This is going to depend on how you prefer. I usually prefer the text code, so that's what we will go with. You thought I was going to show you my cell phone number. No way, suckers. And I would recommend generating this. I don't think it's going to give you an option anyway, but you definitely want a recovery code. So in my case, what I had to do, because I'm recording this video for you guys, I had to tell it to send it to my phone, and so we're going to do it there. Okay, I'm not going to lie to you guys. Thing froze up on me. I had to do it a couple times before it finally took. So I know this is a pain. It may go flawlessly for you the first time, but I know for others they've had the same kind of issues. So if it locks up, just go back in again. It won't take but a minute. It's just the ID me trying to verify the biometrics. You know, we're working with telephones and not fancy stuff here. I mean, telephones are fancy, but you know what I mean. So just be patient, do it again. It'll work, and then we'll go from there. And then it's going to check to see if we are who we say we are, verify against some credit information. Once again, like I said, I know this is a pain, but we just have to go through it. Looks like this new system, once we're in, we can log back in and check on stuff, and it's going to be really nice going forward, but we do have to go through this step. So we're going to have to allow it, or else we're going to have to get the payments and worry about paying them back. All right, so here we are. Finally, we're in. So we can see that we're eligible. We are enrolled in advance payments. No payments have been processed yet. That would make sense because, as I said, they're not going to process till the 15th. And it says you must unenroll 3 days before the first Thursday of the next month. So there's your official cutoff. 3 days before the first Thursday of the next month. So in other words, for this month, if we were to pull up the calendar, 3 days before the first Thursday. So there's the first Thursday. We would have had to unenroll by Monday. Actually, it probably would have had to have been the 27th, but I think it was Monday the 28th. And so that's how they're doing it, 3 days before the first Thursday. Why? Because they're the government. So there you go. All right, and then you just click unenroll from payments. And then if that's what you want to do, you say I understand and want to proceed. But let's say you have to understand, if your spouse doesn't do that and you're doing married filing joint, you may still get the payment. I brought that up earlier, but that was all for me. If I really want to stop this, we're going to have to make sure your spouse, or in my case, my spouse, also goes through the same process. So that's the process. It was a little pain to get through the ID part. I'm not gonna lie, that was annoying, but such is life. It wasn't that bad. A few minutes, and then you can stop that. And uh, now that you've seen this, if you have any questions, just go back through and rewatch the video. I think it'll make a little more sense the second time through for some of you, and that'll take care of it. Other than that, hopefully this was helpful, and have a great summer, guys. I think we're finally starting to get back to normal, and we're really excited to move forward. Talk to you later.